Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the micro bullish scenario where we're looking for a move towards the upside in a WXY, where the most common target area for wave Y is between 30.4k and 30.6k, which is also a nice confluence with the wide resistance area that we have over here between 30.5k and 30.7k. The main reason I'm then looking for a WXY scenario is because of this structure we have over here. After price wicked and took the double bottom for some liquidity, it moved towards the upside in what seems to be a three-wave structure in a zigzag 5, 3 and then another 5-wave move to the upside. And what you can see very nicely is that inside this wave C, you can see a wave 1, 2, 3, where wave 3 has a high amount of volume. Then you have a 4, and then you have a wave 5 to the upside on lower volume, as you can see over here. And that is exactly what you want to see in an impulsive structure. But after this, for an impulsive move to continue, you want to see a 1, 2, 3, 4, 5. So again, you want another range, another high to be made on lower volume than we had at the high of wave 3. But we never got that another move to the upside. Instead, price started to range towards the downside and entered the price section of wave 1. Because it then entered the price action, an impulsive structure is invalidated, and therefore we're then looking for a three-wave structure like you see over here, and then a 3, 3 and another 3 to the upside. Now a WXY can then only be the first structure in a WXY correction and then another continuation to the upside, but of course that is yet to be seen. Let's first wait and see if price can actually move towards the upside. In the bearish scenario, we're going to be looking for a continuation to the downside. So in this scenario, this ABC over here is a corrective structure that ends something. So the end of is wave C, and we're now going to be looking for an impulsive structure to the downside. In this particular scenario, we are then looking for a 1, 2, 1, 2, which is a wave 1, expanding flat in a 2, another 1, 2 for then continuation to the downside in an impulsive structure, where most likely we're then going to go to that 29k area where we have some additional support, as you can see over here. But if price wants to go deeper, we have more support around 28k. The invalidation of this scenario is if price is going to take this high over here. And if we talk about highs from a trading psychology point of view, it is very interesting to maybe take some highs before moving down, because if people are shorting this range, where do they put their stop losses? Well, most likely above all the highs that have been made while price is moving towards the downside. So wicking them out of their positions before then continuing to the downside is definitely interesting. However, it won't be the first time we're not gonna see a move to the upside to stop people out and move towards the downside, because over here you see a piece of price action from history, and you see that price retraced very shallow from the dump that we had before then a continuation to the downside. We never saw another move to the upside. And what this means also at the same time is because price has a very shallow retracement, people can also not enter potential shorts higher up, because many people would potentially be looking for a bigger retracement to the upside, maybe filling this whole gap over here, going to the order block or the range, the pink range, so price moving up, entering shorts and then looking for a move to the downside. But instead, price is already moving down, so many people are missing out on short positions. So there's something to say for both of these scenarios. What is important is that in this range so far, we have seen bullish CVD divergences all the time. We have seen bullish CVD divergences over here. These played out, but the other ones over here failed. The ones that we had over here with all these lows also failed. And that is because all the time we can see small bearish CVD divergences coming to light the moment price is trying to push to the upside. And this is something that we see locally again over here. We do have bullish CVD divergences where the target is then this high or this high over here. But instead, while price tries to move to the upside, it is then countered by bearish, and again bearish CVD divergences on the 1, 3 or 5 minute time frames, which therefore is not that nice, right? That's not what you want to see. What you want to see is a move up, maybe a retracement and continuation without any bearish CVD divergences. So this is definitely something to keep in the back of your mind, which then also plays with the probabilities. in the end, currently, probabilities-wise, the higher probability is a move to the downside, also because of the CVD, constantly bearish CVD divergences, where longs are being absorbed the moment they try to push price to the upside. However, my probabilities will change if price can take this high, because that would invalidate a potential 1-2, 1-2, and then a bigger move to the downside in a wave 3 scenario. So the moment this high breaks, I could potentially be looking there for that white box. But as it stands, price is ranging over here, and we want to avoid seeing bearish CVD divergences, which already happened. So we have to wait and see. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye-bye.